should we talk a little bit more about Micron? Because Micron is down at like another 8% today, which is kind of crazy in my opinion.
Yeah, I think that ties into the next topic as well, which is SK Hynix joining the Nasdaq. Do you think Micron is down because they joined the Nasdaq, or is it something else?
I actually don't know what is. Let's take a look at how SK Hynix is also down 9% today. Although when they IPO'd on Friday, they did go up close to 20%. So um, SK Hynix is kind of interesting. Let's briefly talk about that, and then we'll hop over to Micron. But the way I view SK Hynix is that it's basically very similar company to Micron in that they make the same type of products. They are benefiting in the same way from the increasing prices of memory chips and storage chips, NAND chips, and the fuel of AI growth is what's fueling their growth, right? So both of those things could also hurt both companies, meaning if AI spending slows down or goes down for some reason, or if memory prices come down, both companies could be hurt. So the question is, do I want to own both companies, one of the companies, or what? And in my opinion, I only like to have one. Like I like to make one bet in a particular area, especially when similar companies have similar risk factors. So my bet between Micron and SK Hynix is going to be just one of them, and then the question is which one. Well, when you look at their financials, they're very similar. In the sense that SK Hynix and Micron are both expected to have single-digit forward PEs, meaning their forward PEs is estimated to be between 5 and 10. So these are just rough estimates. So whether or not one is like a 7 and the other one is a 5, or one is a 7, the other one is a 9, it's irrelevant to me because that's just too close to be able to tell, especially on something that's projected to be in the next year, and those projections are often wrong, as they have been for the past several quarters, because they've been just blowing them out of the water. Every quarterly report has been blowing things out of the water. So I can't put too much emphasis on any of them. Now, when I look at SK Hynix, it's a South Korean company versus Micron, a US-based company. I prefer US-based companies, so there's a check there. It's traded in the U.S. on the U.S. markets, whereas SK Hynix is actually traded in the South Korean stock market.
But not anymore.
The representation that just went live on Friday in the U.S. market is what's considered a American depository receipt. It's a third party, basically bankers that manage the purchase of phantom shares on the U.S. market that then go out and buy those same shares in the Korean market for you at a ratio of 10 to 1, meaning 10 U.S. SK Hynix shares will equate to 1 South Korean share, and then they're responsible and managing those shares for you, and it's an indirect investment, and for that management they're taking a fee as well. So there's like all these layers of additional complexity, which gets additional risk exposure to foreign exchange risk, as well as geopolitical risk. I mean, the geopolitical risk would be there with SK Hynix irrespective of ADRs, but those are like factors that make me less interested, especially if the risk profile is the same and there isn't a substantial discount on SK Hynix. So it doesn't intrigue me to want to own both, and it certainly is not discounted enough for me to be more interested in SK Hynix versus Micron. And I have a better pulse on US based companies as opposed to South Korean ones. So that's the reason I'm there. Any questions that triggers, or yeah, go for it.
No questions on why you don't hold it. I mean, we've talked about it plenty of times on the pod before. But do you think that Micron's down because SK Hynix is pulling investors to the stock, or do you think it's
that's a good question.
Narrative?
I don't know, but I'll tell you, in the past 6 months that I have owned Micron, there has been at least 8 different times when Micron has been, like basically declared dead. That like it's dead
Yeah, there's
because
been FUD spread, fear,
right,
uncertainty, doubt.
yeah, memory demand peaked 6 months ago. As soon as I bought it, memory demand supposedly had peaked, so I was buying it at the absolute worst time. So then the war with Iran started, and the Strait of Hormuz was closed. There was going to be no access to helium, and therefore, like you need helium to make memory chips. Therefore, Micron was going to be out of luck, being able to build more memory chips. So that was the reason that they were dead. Then the Google algorithm, memory efficiency algorithm, came out where memory demand was going to be cut to 1/6 of the previous need because the Google algorithm was 6 times more memory efficient. So that definitely caused Micron to be dead. I think that happened in March. Then the Chinese memory makers came in and flooded the market with DRAM chips, and that was going to cause DRAM prices to plummet. So that was the reason that it was definitely dead. Then the hyperscalers started pulling back on spending on data centers. So that was the reason that Micron was going to be dead. Then hyperscalers overbuilt capacity to where Meta has to and SpaceX, et cetera, have to rent out their excess capacity to others. So that's the reason memory is dead. And then of course DRAM prices have fallen to the floor. So that's the reason Micron is dead. So all of these things have happened in the past 6 months. But also their revenues have gone from 13 billion to 23 billion, up 75% quarter over quarter, to 41 billion, up another 75% quarter over quarter. And then they're, of course, expected to have over $50 billion of revenue this quarter, up 350% compared to a year ago. So I don't know what to believe. I'm not that sophisticated to be able to figure these things out, but I might. I suspect that the people who are declaring Micron dead, they might be. They might not know what they're talking about. So I'm just gonna leave it at that and and say that you have probably made a good purchase, Dustin.
Oh, thank you.
Hi, Hamid. Quick question. For Micron, what do you think about competition from Chinese companies CXMT? Do you see any thesis changes which is causing the SP massive drop, or just sentiment? Thanks.
So the CXMT is a Chinese memory maker that I believe Apple is trying to get exempted for buying memory chips from, so that it can ease the pressure on memory chips. And we talked in depth about it on, what was it, 2 episodes ago? That's I don't remember, but
it was either last episode or 2 episodes ago.
Yeah, everything is meshing together. But if you're interested, you might want to check out that episode where we talk about it. But it was pretty extensive. But fundamentally, what I think is that we just need more memory chips worldwide, and I welcome having more memory chips from CXMT or whoever else, because I think that the supply constraint is pretty significant, and the demand for these chips is far outpacing the supply by everyone's estimation who's in the industry. So I kind of defer to that, to the experts basically telling us that there's supply constraint for at least the next couple of years, and that's the best that I can do in terms of trying to guess as to what is going to happen over the coming years. So I'm not concerned about it, is my view on Micron.
Yeah, I agree. The demand, I mean, especially if you compare what the demand will be tomorrow versus today, it's only going to grow. There's new products coming onto the market. There's the rumored ChatGPT, portable speaker device that they're working on. That's going to require memory. That's a new device that no one currently, is paying for or has. Obviously, you have current industries are going to stay where they are with computers and phones. You're going to have cars, more electric cars on the market. Those are going to require more memory than standard cars. robots, potentially humanoid robots in factories and also potentially in houses. Those are going to require memory. So there's a lot more demand coming up than what we're experiencing right now, is my view.
Right.
Do you think hyperscalers just ROI justify the capex? And do you think it'll slow down in the foreseeable future? Before you start answering this one, we have another question about specifically says, what are the chances that on Micron, what are the chances that hyperscalers cut on capex? Wouldn't that be devastating for Micron?
So to answer the question of like, are hyperscalers spending too much on capex and will they have an ROI? The question I would ask you is that who's in a better position to know the answer to this question? Me or some random investor on X or some analyst or the people who are actually putting up their companies' own money, like Mark Zuckerberg or Larry Page and Sergey Brin along with Sundar, or Bill Gates along with Satya Nadella, or Jeff Bezos along with Andy Jassy, the CEO of Amazon, or Elon Musk and SpaceX, right? So who's in a better position to know the answer to these questions? So, if you follow the money on that, it's those people, and those people are obviously spending their companies' money on capex, and they expect to have ROI. Now, if we look at the actual results of the spending and the revenue growth and so on all of these companies, their revenue growths have been accelerating because of the spending. AI is a substantial part of it. Now, in Meta's case, Mark Zuckerberg is telling us himself that they have been using AI to serve better ads, to serve better content to people, to get people to stay on the site longer. So they're using AI in the background to increase their revenues. So who am I to say whether or not their capex is going to justify the ROI that they're going to get? They are saying it, right? Like it doesn't matter what I think, or what the analysts think, or what other investors or pundits think on the sidelines. I'm going to go with their views, especially since they're unanimously voting with their actual dollars that's the case. Now, let's just say in the hypothetical that they all decide to lower their capex. And would that be bad for Micron? Well, since a significant portion of their capex is going for spend on memory, then yes, in theory, that would be bad for Micron. Now, Micron is priced such that everyone expects them to fall, meaning no company has a forward PE of 7 or 6 if the expectation is that amount of profit is sustainable. If you have expectation that future profits are sustainable, then you would have a forward PE of at least in the 20s. The S&P 500, for example, being a perfect sort of comparison point, has a forward PE in the 20s. That means Micron is getting discounted roughly 70% on its future profits because no one thinks it's sustainable, right? So if capex continues to go up or remains the same, and Micron continues to get a similar chunk of it, then their forward PE will be sustainable. And if the capex goes up, it might even their forward PE might even go down if their stock price doesn't move up. So one of those two things has to happen. Or if the capex starts to go down, a significant amount of that expected decrease in Micron's profits is already baked into Micron's price. So the question is, how much lower would Micron go? And I don't have the answer to that, but I suspect it would be bad in the short term for Micron. But what will it actually result in their profits? I don't know. I think their profits might be pretty sound in terms of, at least for the next few years, they're going to have substantial profits. And at some point in the next few years, they're going to start buying back their own stock too. So I don't know, like all things considered, I really like where Micron is.
I think part of the question here is there, to me, there is definitive value in this AI wave. That AI is generating value for these companies in a plethora of ways, right? You mentioned with AI optimizing ads for Meta. It's making employees way more productive. The question is there a point where the capex spend plateaus because the return plateaus, right? Because in theory, if you invested an infinite amount of dollars, do you get infinite amount of return? The answer is probably
Right.
no. So that that's the question for me, is where's the ceiling? Because we just have no idea. We're kind of like walking in this blind room and we don't know where the wall is. So that's how I would kind of think about it. I don't necessarily think that you're going to see all these hyperscalers cut at once. The other thought is like the prisoner's dilemma of, let's say someone does cut, does
And
a
that was the
different
wrong thing to do.
hyperscaler just take that person's spot and they like go even harder?
Right.
Like I don't know. But I don't think it's as I don't think it's as clear cut as everyone's going to cut at once or everyone's going to just like invest everything at once. We're just kind of see it unfold, day by day.
The far more likely outcome, by the way, on hyperscaler capex is that they would just maintain similar levels, right, and allow their revenue growth and profit growth to just make it a smaller percentage of their revenues over time, right? So, if, for example, Meta is spending $140 billion of capex, well, they could just maintain $140 billion over the course of the next 5 years. On an annual basis, and over the next 5 years, as their revenues double, now it's all of a sudden half as much as a percentage of their revenues. But they haven't necessarily cut capex, and that is the far more likely scenario to play out over the coming years, in my view, than all of a sudden hyperscalers deciding, oh, we're going to cut capex pretty significantly. So, but yeah, and the prisoner's dilemma issue from a game theory standpoint is also plays a role, because whoever cuts first is sort of like blinking, right? And they might benefit less as a result of future growth that AI spend enables. So, does Google want to be second to Meta, and does Meta want to be second to Google or Microsoft or Amazon? All these guys are sort of like competing pretty heavily for this.
And another angle of this is, if one were to cut significantly, I have a funny feeling the market would positively reward them in the short term.
Right.
Because there's a lot of negativity around how much is being spent right now. So it might help them in the short term, but actually hurt them in the long term.
If you enjoyed this clip, consider subscribing to the Buy Hold Rant podcast on YouTube, Apple Podcasts, or Spotify. New episodes are released every Wednesday, and you can watch them live on YouTube.